thing we've really got to do, and some of it's happened, is look for mitigation. So if this is the new normal, we've got to look at how do we actually mitigate. And I think a lot of buildings have been built in times prior to these events happening. So when we build back, and we have an initiative at QBE on claims, we need to build back better. Rather than your home gets flooded and we just build it back exactly as it was, we need to think about how can we mitigate. And the industry is really keen to talk to governments, any other agencies, any claims managers out there on how do we actually build better, because we need to think about the world is somewhat different from what it was. Hello, I'm Andrew Horton. I'm the Group CEO of QBE, and this is the future of insurance.
Andrew, it's fantastic. It's been, I did the math, 11 years since I've seen you, so it's been a little while. Much has changed for us, but for the world as well. It's great to sit down with you, and I appreciate getting to do that in person here in QBE's headquarters. Thank you for making the time.
Bryan, it's great to see you again. It's great to see you down here in Australia.
Yeah, first time. I've gotten a sunburn, which is not a normal thing for me in winter time, but I'll take it.
You have to be careful.
Yes, as I learned after the fact. That's what insurance should be for, right?
Exactly.
Going way back to, I think, might have been 2009 or 10, you were part of a conversation around the cycle, and actually maybe in 2011 we had Christchurch, we had a number of massive catastrophes.
Yep.
And post that, things quieted down and the industry recovered. We have a lot of catastrophes at the minute, and not just nat cat, but we have inflation, supply chain, any number of things. And it's raising the cost of insurance, both for providers of it, it's raising the cost for buyers of it as well. And my concern is in different pockets, we're getting into this place where will the market clear and do so in a way that is sustainable to offer and to buy insurance. Your purview is global.
Yep.
I'm really curious your take on that today. Is this a cyclical thing? We need to wait for it to sort of cool off, or is this a new, I hate the term new normal, but
sure.
And what do we do going forward to make sure we're still viable?
Yeah, so you're right. I mean, the great beauty about QBE is we've got business down here in Australia and New Zealand. We've got a big European operations, reasonable size Asian operation, and a business in North America.
Yeah.
So we look at everything on a global scale. It's a great point about the natural catastrophes because, again, going back over history, I remember 2004 and 5. 2004, there were 4 hurricanes in the US. Right. Each of them probably cost less than $5 billion each. Yeah. And now it's like a light breeze somewhere on the planet, and you're hitting 5 to 10 in no time at all. Yeah. So since that time, we as humans have built more and more buildings in areas which are subject to natural catastrophes, and we've seen different ones, as you say. There are more things than just purely nat cat catastrophes in general. The industry's grown a bit over that period of time, so the capital's gone up.
Yes.
The reinsurance industry hasn't grown that much in terms of available capital.
Yeah.
We do look at alternative markets, but that's probably a bit bigger now, 20 years on from back in 2004. Yeah. So I think it is a bit of a challenge, and down here in Australia we talk a lot about affordability and availability of insurance. We saw the largest flood event ever in 22, and of course since then we've seen the largest New Zealand flood event, the largest flood event in Dubai, the largest now wildfires in LA. Yeah. It's just remarkable what's happening. The insurance industry does have to stand up and insure. This is what we want to do. Yeah. And your challenge, I think, is whether people can afford it. The thing we've really got to do, and some of it's happened, is look for mitigation. So if this is the new normal, we've got to look at how do we actually mitigate. Yeah. And I think a lot of buildings have been built in times prior to these events happening. So when we build back, and we have an initiative at QBE on claims, we need to build back better. Yeah. Rather than your home gets flooded and we just build it back exactly as it was, we need to think about how can we mitigate. And the industry is really keen to talk to governments, any other agencies, any claims managers out there on how do we actually build better, because we need to think about the world is somewhat different from what it was.
Yeah, no, and I appreciate you saying that, because it is, if we go with just what the cover is on face value, it's shingle roof destroyed by hail, replaced with a shingle roof that is just going to be destroyed again. Yeah. Rebuild the house in a floodplain, not raising it up, not doing anything to mitigate, you're just asking for trouble again. But to mitigate when everything is fine, and to prevent it means buying a whole new roof that's resilient versus just the delta from replacement to resilient. There's been so much talk about this, but I haven't seen, with rare exception like honey, I haven't seen too much effort to actually move things forward. Is that changing? Are you sensing that now? Or
so it's a great point, Bryan, because you need a combination of the person who's got the asset wanting to do it, because often they want their house replicated. Right. And they don't want to think about building it back differently, or raising it on stilts, or move it 100 meters away, 100 yards away, because that will be off the floodplain. So if you've got that, then you've got to get some sort of probably government working on it, they're investing some funds in it with the combination of the insurance claims payment. You're right, because chances are moving it will cost more than just rebuilding it. And we don't want to go for the cheapest route, because that just means we'll be doing it again in a year or 2 or 3's time. Or we'll stop insuring you, which is the worst thing in the world, isn't it? We just say, we built your house back, Brian, but now you can buy. Now no one will sell you an insurance. So I think it's getting that to work together, and that is not an easy triumvirate of the person who owns the asset, the insurance company, and government or state support on that. Because it could be quite expensive, couldn't it? Especially when you get massive events, as we've seen over the past few years. But I think I ultimately think that's the only way to go. And what I'm not keen on is the whole thing being politicised, that insurance rates are going up and they're just making too much money and it's becoming too expensive, because we can prove the industry is not the most profitable industry on the planet. And certainly buildings in cat areas is not profitable really at all in certain areas of the world.
Do you see anything on the product side? There's a sense that I've gotten that the exposures we're insuring with policies that were by and large written in the sort of 1950s and evolved a bit since then, that there's a disconnect now. And are we trying to do a square peg round hole situation here to make that cover work for an exposure that is not actually what it was designed for? Or do you think the cover is still fit for purpose?
So I think the industry is trying to raise to get the cover better. So I think we're being more precise, and it's an interesting one to me because we've got better at understanding the cover and understanding the risk. So I think the industry is getting more granular on what is the right cover for you and where are you. And before, it was more of a pooling effect. And this issue. And even now you sort of hear that because there's one event somewhere in the world, I'm sure somewhere else in the world is going to have their rates go up. Generally, I think the industry is getting better at charging for the right amount. For the right risk.
There's definitely an evolution of our capabilities from a pricing standpoint, and to be more granular and exact with it.
Definitely. Oh, definitely. I mean, you go back 20 years, and pricing models were in their infancy, and a lot of businesses were being written with virtually nothing as a pricing model, and it was just all based on history. And therefore, you just repeat it. And if history doesn't repeat, then that doesn't work. So I think we're a lot better than we were.
Andrew, with QBE's business, it's quite diverse, but it's not very like vanilla mainstream. You've got commercial lines, specialty lines, and then some personal cover as well, but even that is a bit specialist. Specialty lines at E&S has been very attractive relative to some of the mainline homeowners and motor. Does that protect you from some of what's going on as a group, or is that also subject to some complexities?
Yeah, so I'm a great believer in having a balance of a number of things. So I think what protects us as a group and will continue to make us a successful insurer is the fact we're in 27 countries, writing a number of different lines. They run at different cycles. That means we can afford catastrophes of whatever version in certain areas, and the rest will give us balance so the company trades forwards. So I think it's a great thing having balance, and it's something I've been talking about a lot since I joined QBE, because I'm not sure we were as balanced as we could be.
And you, your personal opinion, and if this is too provocative, feel free to skip the question. I will take that. When you look at a more kind of vanilla mainstream carrier, and there are examples all over the world of carriers like that, perfectly fine historically, some have gotten quite large and successful over time. Do you think that is a viable model going forward, or do you think it takes a level of diversification into not just new geographies with the same risk, but taking different risk, and even if it's partnership, looking to diversify further than just scale, which was sort of a viable enough way to diversify in the past?
I think based on what we're seeing, it's difficult to be a monoline, mono-location underwriter, isn't it? I think going forward. So I think your point about partnership. I mean, you can do something through reinsurance, can't you? You can hedge some out through a multiple panel of reinsurers, I guess. So I think more of that is needed. And I'm sure we're going to find some insurance companies do that. When they find they've got too large a loss in something, whatever the event is, they've got to look at their book and think, how could I have shared that with somebody? Or could I have got something else which actually balances that out? As I say, I'm just a great believer in balance. You can have too much of something, however good it looks. The danger is you take on too much of it and then it isn't as good as it was, and you've got major problems. So I hold back some of the areas where they'd like to write more because we potentially could have too much of it. So I do think having this diversification does benefit everybody who insures with us, but I would say that because I'm the CEO of QBE.
Fair enough. One of the things that people would say, especially looking at some of the insurtechs that grew quite rapidly early on, is you can't grow rapidly in insurance and be profitable. And I look at a company like Progressive. When I started in insurance, they were $3-ish billion, and they've grown quite rapidly at pretty extreme scale. You were CEO of Beazley during quite rapid growth overall versus the industry norm. QBE has been growing quite well at very large scale. Do you believe that you can't actually grow and be profitable as an underwriter, that you have to be more cautious, or do you think it is possible to grow materially?
I think it is, Brian. I mean, the issue is there's quite a lot of examples of companies that did grow rapidly and then they had major problems. So it's got to be how you grow, isn't it?
It's not just growth in and of itself.
It's not growth in itself. And it's an odd one because I say here, when I talk about growth to the board, I'm talking about sustainable, profitable growth. Because can we just assume that I mean sustainable, profitable? Because of course it's easy to double the top line of an insurance company and then live with the consequences. You can bring it all in, we can do all lots of different things. So I think it is possible. So it's how you do it. So it's looking at the risk sensibly, it's looking at the pricing models, not getting too much of anything. Because ideally, in an ideal world, I'd grow QBE, everything would grow. If we've got the balance now, you want to sort of double it in the same balance. The problem is the world's not like that. There's an opportunity in this line at this point in time, and I don't think we should go by a factor of 10 at that point so we can bring everything else up. So it's a question of growing the right way, which is pretty obvious, isn't it? And I'm sure there's no insurance companies out there who would say we're trying to grow the wrong way, but there are a lot of examples. There are a lot of examples, sadly, aren't there, of taking too much on. And you've always got to you've got to really think it through. When an opening arises, why is there so much of it at this point in time? And if it's all coming your way, you need to question, why is it all coming your way?
The other mechanism for growth that may be tougher for a large company is, here's a small niche, 5, 10, 20 million. When you're $20 billion-ish company, that's not enough growth to report back. It takes a lot of those smaller efforts to add up to sufficient growth at your scale. How do you balance that, brilliant opportunity, but too small, yet we would still love to play in that? Is that a partnership, MGA support, fronting, or capacity kind of story? Or do you just say, look, we're just too big to go after something like that?
I don't think like that. I mean, I like MGAs, but I like MGAs really in areas where we're not going after them. So they're specialists and they can do something or get access to something we can't do or do it in a way we can't do it. I'm quite happy to start with a 5 million book that becomes 25 or 50 or 100, and they can all add up if they can be done really well and they're complementary to what we do. I'm completely open to it. And we've got a good couple of examples of doing that. We've gone to healthcare in the US and it starts from nothing and grows, and construction in the US starts from nothing and grows. I mean, I think those books can be 100 plus, but they're not going to be billions probably. But they're good things to have. Our clients really like them. Our brokers like the fact we've got more product now. So I do like doing that. I mean, I probably won't personally get involved in every single one. I do know the people running both of those, but I won't get involved in every single one. But if you can sort of start those specialisms at scale, so you've got a reasonable number of these, 5 or 10 or 15 or 20 taking place across the QB world, they will add up to something meaningful over the next few years.
It's really a cultural question. Do you have the sort of organizational culture to support that mindset?
I think that's the key point, isn't it, Brian? I think we do. That's what we're going for. So we're really keen on organic growth. And organic growth, as you pointed out, in some companies can be done at pace successfully.
So one last question for you, and this actually, so I'm here for this InsurTech Australia InsurTech Live event that just happened yesterday. There's quite a buzz about QBE there. And part of it was QBE Ventures and James, who's the chairman of InsurTech Australia. So it definitely helped, and he was fantastic in his talk yesterday. He had the whole room regaled. But the conversation was QBE Ventures is different to what we see from some of the other CVCs. It stands out positively. And as an innovator and supporter of innovation, again, QBE was being talked about pretty consistently. And granted, it's an Australian audience, so I don't know that they were speaking globally or not, but in their market, they feel that QBE is a partner and a supporter. Is that something that's been intentional and cultural? And because the other conversation was, innovation is a joke at large carriers, and it's a team that runs on the side, and you never, there's a sort of dog and pony show, and nothing goes anywhere. But I did feel this difference when the conversation shifted to QBE. How have you instilled that, or is it just sort of organically come up that way?
So I think the company's been here in Australia since 1886, and I think we've innovated a lot over that period of time, certainly in this region. When I joined, we came up with a new vision for the company, which we didn't have, and that was to be the most consistent and innovative risk partner. And we liked the idea of consistency, picking up some of the points earlier on that we're always going to be there for, get balance, which we didn't necessarily have a track record of being it. And we wanted innovation. Now, you can put it in a vision, put it on a few posters on the wall, it doesn't mean the whole company becomes innovative. So then you really have to get it instilled in the culture. And James and his team has been really helping that. So I feel when I joined, the ventures team was a bit on the side, and we've now got them much, much more integrated into the whole company. So the divisional CEOs interested in talking to James and his team, and James is trying to support them, finding things that makes a difference to them, rather than James going around the world finding this and saying, how about this? No, you don't want that. How about this? No, you don't want. And so therefore, we've got it much more integrated. We have a great ventures board, and I would say that 'cause I'm sitting on it, and we're putting money behind it. So we're willing to take a risk, because our aim is to try to utilize the idea. We're not doing ventures to make a lot of money from them, so we're not thinking in terms of return. It's nice if they do make money, but our aim is to actually find things that do help the company innovate. And James's team is very integrated within the company, and we're keen to do it. So when we meet as a group, we want to invest. I hope that comes across. And James is a great presenter, as you just say. He's very enthusiastic, and he seems to love his job, which is excellent.
He also brought me up today, so I'm on a just pro James take overall. He saved me from just sitting in the lobby for a bit.
That's good.
No, I really appreciate that, and I would just ask, I said that was the last question, but I lied. Going forward, we talked about viability of the market, sustainable, profitable growth. Are there things that you're thinking about, obviously without giving away secret strategy of the company, that you think are critical for the industry to be considerate of at a global scale? Because you're one of the few people who has to look at that.
I wish I had the complete secret sauce to that. I think it's just, I'm a great fan. We're in these lines of business. We're there to support our clients. We're going to be there for the long term. Let's listen to our clients about what they need, and let's innovate and adjust to their needs. And that might sound a bit strange, Brian, but I'm not sure the industry listens to the clients enough. So the other key thing we've launched is, and this should be something that we probably should have done a long time, is a real focus on the customer. So you have a customer strategic priority embedding within the company. Everybody's thinking about it. Does this benefit the customer or not? And are we talking to our customers? And when I talk to our customers, I do mean our intermediary brokers, because a lot of it comes through that, but mainly the end customer who we're supplying the policy and claim to.
It's the debate of who's the customer, and everyone seems to say you have to answer with one. I don't believe that. You have to think of all of your constituents. There's internal customers as well.
That's right. Definitely.
I do want to respect your time. I can't thank you enough for sitting down. And,
no problem.
It is a fantastic city. I can understand why you moved here. But it's wonderful place, and thank you for having me today.
Brian, that's great. Thank you.